Hey guys, good afternoon. I'm going to look at some charts and go through where we are with this overvalued market um, and see where we might expect a little pullback. So, why is the market overvalued? Well, we are at a 848 point 30-day range on the R vol when the H vol was 405 points for the 30-day range. Okay. So that is like 2 to 1, over 2 to 1. Um, and we got to the 30-day two on Friday, the H fall 30-day two right there at 57.2275. But we are, we still have approximately 27.5 points to go. Well, not approximately, we have 27.5 points to go to get to the 30-day one for the new monthly one. So that's the difference between trade days in the month. We have a new month. We're already at 117.5 points versus the 145 30-day one. So where would that take us? That would take us to 57, 52.25. So that is where I'm expecting to see the market turn around. We could go below that before then, but where is that to the upside? And so 57.50 is our weekly two, 57.46 to 57.51. So that's where I'll be looking for sure, to see a bunch of selling pressure. And if we look at our quick strike to confirm that, let me just pull that up real quick. You can see we do have high open interest on the puts and calls. So that's 858 on the call open interest. So dealers sell premium. So that's going to be a short call. 858. And it's right here at our 1-2 line. So I would definitely be looking at 57.50, maybe 57.45 on Monday for your upside. And realizing that we're so oversold on that 30-day level. So here's your high call right here. The high calls at 5,800. So that looks like, the level that they're parking their main risk at, and so they could be doing a spread between 5750 and 5800, something like that. But it does get a little choppy inside the one, and the high put is at 5650 and 5700. So between 56.50 and 57.50, that 100 point range here, and then here's your out of the money straddle 5600 to 5800 for Monday. But definitely be looking at 57.50 for the downside because of, like I said, the oversold nature of the 30-day over your monthly range. And we've got our 30-day one right here at 145. So it all lines up. The downside, that April 2nd move went to 1.25 times the monthly range, 30-day range, and then back in. We can measure on R vol and H vol. R vol is a one period range, and they trade between the one period and the 14 period. So you can see here we stalled out at the one period weeklies before giving that extra bit of push on Friday. Here was the implied volatility break evens. What we do is we give you two reports. We give you a Globex report after the market closes for the next evening trade session, and these are for all day. This isn't just for the Globex period, it's for all day. And then the next morning, we'll come in and update the report for the RTH period. And on Friday's report, for that updated report, we actually noted that the range would go up to 57.24.75 from that 57.21 level that was so good. Pin around 57.10, and then even get an upside target at 50.26. So between 24.75 and 26 from that initial Globex range of 21.75. So here we broke out of the implied volatility straddle break evens, went up to our first line at 21.75, and then went up to our 24 line right on the tick, and came back in. So we got both of the levels on Friday. Our volatility calcs are doing quite well to map the market. You can put this on the VIX and see a monthly VIX range, leave the threes and go into the tails to these statistical levels. For these breakout levels, interestingly, they went to 1.68 and 2.68% outside the range. Here was 2.68 and here was 1.68. And then it came in and hit the 30-day one on the close and turned around. We're below the 30-day threes. Sorry, this is the three. I customize these. No, this is the one. Okay. 30-day ones inside the 30-day threes on the open. Is that how I did it? No, those are ones too. Okay. 30-day ones on the open and close. And then, okay, that's right. Break my ones and then go outside to my tails. Because that's where the dealer breaks out from. They break the ones and move out. I should put the three on there. But you can customize these any way you want. So if you just want to put the three on it to see where the 30-day threes are. It's super simple. I set up some templates to have those. I've got so many. I need to clean these out. But here, PT3, line only, and change it to a 30-day. Oops, that was a mistake. Hold on. Uh, 1530. Okay, 30-day right there. Oh my gosh. No wonder I can't tell what it is. I've got the colors all messed up. Make it orange. There we go. There's my 30-day threes. So you can see we can get down to 2050, and you can change these calcs from the open to the close. So that would shift it from 2050 to 2640. So you see how that happened? So we broke through the 30-day going down, and it will get down to that lower one on the open and turn around and go back up. Right there, 2050 is my guess. There's your range. Very cool. So you can customize this however you would like to look at it. Monthly, or the number of days in the month compared to calendar days. So let's just take a quick look at the monthly three. Calendar days versus trade days, 2050 to 1280. So if we go below 2050, it'll go down to 1280. But I, that may, happen. But oh my God, I hope not. I prefer to have a little bit of volatility and stay above 20 if possible, just to have some premium to be able to sell, or market to trade. If you get back into the nosebleed 10s and 12s, we're talking little tiny, tiny range days where it's just impossible to do anything to make money. So I do expect volatility to turn around soon just because of the positioning of these levels. And we can see easily when that happens with the JATS PT indicator. You can put that one period on top of your 1, 2, 3 and see if you're trading inside the one, inside the two, or inside the three, or outside. And when you go outside, that's when you get your big range breaks, um, range expansion days. If you're inside, you're inside. You see what I'm saying? There's no reason to sell puts or try to go for call spreads or anything like that, or put spreads, because it's not going to go anywhere. This is where you want to be selling, short strangles or iron condors. And when it goes outside, that's when you want to be trading your call spreads and your put spreads and trade to the outside levels. All right. So our indicator is available for the NinjaTrader platform, and it's easy to adjust these calcs. So you can put your weekly calcs up. You can see how the market, the S&P 500, traded right up to this weekly three, and you can customize your distributions by showing daily or Globex 2:15 in the morning to 8:30 in the morning, or 1700 at the Globex Open to 8:30 in the morning. There's many different ways to put these distributions together. You can show the 1, 2, or 3 if you just want to see your one breakouts, um, and threes. But you really do need the twos as well, because the market will often respond to the two, especially when you're inside the distribution. So, one, twos, and threes, and tails. When they go outside the range, we give you the tail. So you really do get it all with JATS PT. And when you put it together with the options, Quick Strike, I highly, highly, highly recommend that you go to Quick Strike, and you can sign up. Let me show it to you. Let me move out of it and come back in, show you where to go. Right here. You can register an account at CME Group quickstrike.net to get your free version. And when you're ready to upgrade to a regular account, um, that's when you want to go over here to the users quickstrike.net and sign up for the premium platform. Bantix software, Bantix Technologies is where you want to go, and buy their subscription for this. You will love it, like I do. Extremely um, professional tools. A lot of the market makers use this. In fact, a lot of people on Twitter first started commenting to me, why am I using Quick Strike? They don't see it very often in the retail world, because mostly market makers use it for good reason. It's very accurate, and when I put it together with JATS PT, it's just like magic. So we're getting some really good results for our market analysis using the two combined, or PT levels with the quick strike implied vol. So when we put the R vol and historical vol for realized volatility with the implied vol, it works out great. H vol, R vol, and implied. Get all three. All right. All right. Thank you so much. We will see you soon. I'll have a Globex report coming out in a few hours. Y'all have a great rest of your afternoon. See you soon.